Hey friends, welcome to Trade Win Lose Repeat. This is the beginning of the channel, 7th of January 2025, beginning of 2025. And what this channel is about is basically some weekly analysis. Uh, Sometimes, if I can, we'll do daily analysis. I'll be trading whenever I see setups. I'm not going to say every day because, well, they're not trade setups every day. Whenever I can share the trade setups, I'll put them on my Twitter, and also just an overall view of where the market is going. I try and have a very simplistic approach to the market, and that's how I found profitability. I've done, all the boring, long studying of everything, you know, ICT, this and that, all the complicated stuff, and just found myself being profitable with simplistic approach, following a train, supply and demand, all the boring bits and pieces that people say don't work. So that's what I tend to use here. These are the trading pairs that I trade the most: gold, Euro USD, GBP USD. I'll probably trade 80% of my time on gold. That's where I find myself the most losses, but also the most profitable. I watch GBP, JPY, especially when there's high volatility due to the Bank of Japan rate decisions. It's been, you know, uh, due for some changes in the past year, and we haven't seen very much. So volatility has increased, and the S&P 500, because it sort of leads the market with the main indices like the Nasdaq as well. Bitcoin, just because it's Bitcoin as well. I don't trade it very much, but I just like to look at it and analyze it. But we'll start with gold anyway. So just a quick analysis and a quick video, not to make it too long. What I want to do is just analyze the macro time frame and get a guidance because a guidance of where we can trade, or the directions we can capitalize on. Because if you look at the 12 month, which is something a lot of people don't do, they just jump straight away into the 5 minute and 1 minute time frame. What you want to do here is just look at the 12 month. Yep, this is 2020, and it's sort of price ranged around this level of 2000s, between like 1700 to 2000s, for months and months and months, until it finally broke out. And then last year we just saw a huge explosion, especially after the this second half of the year. So what do we expect with gold? Uh, Never mind the TP1. Basically, this is some of the trade that I took. The only trade, actually, I've taken 2 trades this year, and I put it here, but I'll talk about that later. All we want to do is just understand that at some point this candle will have to fill up somehow. It could come down to as low as 2100s, 2200s, 2300s, because I'm guessing it will fill it up at some stage within this year, and then obviously it can just keep going up and up because of the current demand and the uncertainty in the markets, right? Everyone sort of goes to gold as a safe haven asset. So because we are just starting the year, I'll go to the 6 month time frame, and then the 3 month. Still looks very bullish, but we have to understand that we've seen plenty of bullish trend for a few months, so a reversal wouldn't be out of the ordinary. We can still see a pullback to the 2000s again, all these level, and still understand that it will be normal for gold to pull back, right? Most of the time it could come back up, take the high, and then sort of reverse. But obviously this is thousands of pips, 2000 pips or more. So as long as we understand that we're in a bullish trend, but we can still see pullbacks, we can start jumping to lower time frames, right? This bit of a dodgy candle, obviously it doesn't gives us a lot of confidence unless this next 3 month candle breaks above this area, then we can probably expect a continuation and a bullish move. But at the moment, I'll say we'll probably just have like, you know, a pullback due not very far away. This is a simple moving average. I tend to use it as a quick guidance, but I don't really trade on that very much. What I mark here was the 2024 low, 2024 high, as a Fibonacci without the rest of the complicated stuff. 50% is where I would probably expect a pullback, right? And then the month is sort of opening here, so we don't know exactly where we're gonna go. So, straight away. So what I tend to do now is just, as long as I understand where we are, where we're sitting, and that we can still go down quite a fair bit, I will then start looking at the daily time frame and just, you know, look at the simple setups on where to take trades. So daily, still a bit uncertain. We don't know exactly what can happen. We can just create a support from here and then continue up. And then what do I do if we start seeing some bullish price action? Then just go level to level. Where's the next sort of supply area or resistance, how you want to call it, at the top, right? Around 2700s. So go back to the 4 hour. First trade of the year. This is the 2nd of January. I didn't look at the chart very much, and then on Friday, I just sort of I had an alarm here. Why? Because it was a good higher time frame resistance. Don't kill me for saying any sort of words. I use whatever terms I want to use. You use yours: supply, resistance. Everyone has, different terminology for all this stuff. But I saw the resistance. I know if price breaks and holds above this area, then probably the next sort of area would be around here or here, right? So when you have a clear way, you can start trading to the upside. But if you start getting a bounce from here, then I'll just try and capitalize on higher time frame supply and demand. It's pretty simple, to be honest. Obviously, there was a bit of a wick fishing here, liquidation, but after this candle closed sort of like weak and then started to break the low of this 1 hour candle, then I just took the trade. It was a 50 pip stop loss. And then when I have these big stop losses above like 30 pips, I just minimize my just make sure basically that my stop loss is not higher than 1 or 1.5%. So I adjusted accordingly based on the lot size. If you don't understand what that is, maybe just drop a comment below if you want, and I will make another video explaining that further. Remember, this is just a basic beginner's channel for you to understand price action if you have an idea of the charts, basically. Hopefully you can just keep it growing in the future. But anyway, that's the sell that I took. First trade of the year. Took the take profit 1 here. Why? Because we started to find some sort of support, and usually gold tends to come down, liquidate these wicks, these long wicks, liquidate them and then reverse. So I made sure I was taking my profit somewhere around here. I put it here, but I think it was somewhere around here that I took the profit 1, and then I just put my stop loss in break even and let the trade run. That was the first trade. It was roughly, risk reward says 3.7, but because I took profit here, it was like 2% all up. And then yesterday, before I go to bed, I started analyzing the chart, right? I made sure this was sort of like a relevant area, resistance, where it could have had a bounce, which at the time I was trading, it had a bounce. But then what I did was, price was around here. It hadn't created this next candle, 4 hour candle. So I was about to go to bed. I put a sell limit just at the touch of this week, which is an area where it was the last sort of support breakout, come and retest, and then continue down. And it almost sort of did it, but I think there was some news. Let's just quickly look it up. Forex factory. January, Monday, Tuesday. Yeah, I mean, PMI, this final PMI, which went worse than expected, but still not a red fall. There was a yellow one. Still kind of like moved the market a fair bit. So what it did was trigger my trade. Basically, trigger me in. Let's move these so you understand where it trigger me here. Enter the sell, and then my stop loss was just above this candle. Took me out, and then reversed and continued to roughly where my take profit would have been. So, a bit unfortunate, but I risked about 1%. So I made 2, lost 1. So I'm still in 1% profit for the beginning of January so far, which is not bad. I aim to make 3% a week, 15% a month. Some months I make more, some months I make less. That is and I'm going to be leaving every single trade that I take. So it's all pretty transparent of everything I take, wins and losses, doesn't matter. I mean, the idea was correct. You could have also decided to take, the trade from the resistance, but I tend to not look at resistance of 30 minutes or 1 hour. Maybe 1 hour, but the 30 minutes, even if it was a 1 hour, my stop loss would have been somewhere around here, so it would have taken me out anyways. So what I tend to see is just people sometimes expect the price to come and touch here. Sometimes it doesn't even come here, it just comes below and then continues down. So just to be safe, I put it just a little bit above, but price just decided to come up a bit more. It was 100 pips all up. So this stop loss was 75 pips, which was long enough. I wouldn't have left it that long, but anyway, that is basically the gold chart right now. What do we expect for the rest of the week? Now that we broke this area, we'll still want to see that price doesn't hold above this. If gold starts breaking this, we most likely see price coming back up to the 2662 level, more or less. If we continue the trend down, then I guess just break below this sort of area, relevant area, and then just continue down to at least 2600. I'm more leaning towards the downside, but you can't have a full bias every day. Just readapt to price where price shows you. That's the analysis for gold. I thought of making an analysis for everything right now, but I'm just gonna leave it as a quick video. Just analyze gold and intro myself, sort of thing. I'm gonna try to speed up some of the videos for the future, but at the moment that's all I will give because I'm not gonna go into too much depth. Same analysis with gold. With the S&P, lows, highs, sort of expected areas where price could bounce from, reject. I don't look at fair value gaps very much, all the ICT stuff. I don't have all that complicated terminology. I like to keep it a very simple approach, and that's probably it for now. We'll look at some of these pairs maybe tomorrow. I'll upload another video, try and keep it as short as possible despite this going a little bit long.